Welcome to Market Brief After Hours. Today, we are unpacking an absolutely massive day on Wall Street. The major indices didn't just rise, they soared to historic new heights, leaving investors with plenty to talk about.
That's right. It was a banner day. We saw a spectacular rally, with both the S&P 500 and the Dow Jones Industrial Average posting fresh record closes. The optimism was palpable, driven by strong corporate earnings and a significant drop in oil prices.
Let's get right into those numbers because they are eye-popping. Break down the major indices for us.
Absolutely. The S&P 500 gained 1.79% to finish the day at 7,737, marking its first fresh high since June. Meanwhile, the Nasdaq Composite surged by 2.59%, closing at 26,585, and the Dow Jones Industrial Average popped 907 points, or 1.71%, to end at 54,086.
A 900-point surge for the Dow is incredible. What was leading that charge?
Caterpillar was the star of the Dow, jumping more than 5% and surpassing its previous intraday record from last month. They reported better-than-expected second-quarter numbers and even bumped up their revenue growth guidance. They're seeing massive demand for their equipment, largely driven by the ongoing AI data center build-out across the country. Plus, they noted that their tariff costs for the year should come in at the lower end of expectations. It's really indicative of how strong this earnings season has been. In fact, over 84% of S&P 500 companies that have reported so far have beaten expectations. Beyond tech, which jumped 4%, other parts of the market saw solid gains. Financials advanced 0.9%, led by key stocks like Goldman Sachs, which gained more than 2%. Industrials and materials also rose nearly 2% apiece.
You also mentioned oil prices falling. That's usually a big relief for the broader economy. What triggered that decline?
It was heavily influenced by comments from Treasury Secretary Scott Bessent during an interview on CNBC. He mentioned that the U.S. is in active talks with Iran, suggesting there's a real chance we could see a deal today or tomorrow to reopen the Strait of Hormuz and move towards a more normalized position in this conflict. That hope of restoring freedom of movement sent oil prices tumbling. West Texas Intermediate futures dropped 5.69% to settle at $75.77 per barrel, and Brent crude fell 5.26% to close at $79.36 a barrel.
And how did the bond market react to that?
Treasury yields slipped right along with oil. The yield on the 10-year Treasury note fell over 6 basis points to 4.619%, while the 2-year yield, which is highly sensitive to Federal Reserve policy, fell over 5 basis points to 4.198%. The longer-dated 30-year bond yield also shed over 4 basis points, closing at 5.182%. This pullback in yields is a welcome change, especially after the recent hawkish hold we heard from the Fed last week.
Now, before we look globally, we also got some fresh U.S. economic data today. What's the story with jobs and manufacturing?
We saw some interesting dynamics. First, the number of workers voluntarily quitting their jobs rose by 79,000 in June to 3.23 million, up from a revised 3.15 million in May. This was led by leisure, hospitality, trade, and transportation. On the trade front, the U.S. trade deficit narrowed to $73.3 billion in June, down from $77.6 billion in May, which was roughly in line with estimates. That was mostly due to imports falling by 1.8% to $388.0 billion. However, factory orders disappointed slightly, falling 0.3% to $656.5 billion in June, whereas economists were expecting a 0.3% increase.
Let's shift our gaze across the Atlantic. European markets seem to catch this positive wave as well.
They certainly did. European stocks closed on a very firm note, with some hitting fresh record or multi-month highs. The Pan-European Stoxx 600 climbed 0.73%. Looking at specific countries, the UK's FTSE 100 gained 0.2%, Germany's DAX rose 0.77%, France's CAC 40 was up 0.61%, and Switzerland's SMI settled 0.64% higher. This was supported by easing worries about tech valuations, encouraging corporate earnings, and strong U.S. manufacturing data. European government bond yields also moved lower. The 10-year German bund yield dropped to a 3-week low of 3.107%, and the UK 10-year gilt yield fell to 4.897%.
Any notable economic data out of Europe we should be aware of?
Yes, a few points. France's state budget deficit widened to 106.8 billion euros for the January to June period, up from 100.4 billion last year, as spending outpaced revenue.
In Italy, retail sales edged down 0.1% in June, the first monthly fall since December. And in Spain, jobless numbers rose slightly by 0.85% in July, though they did add over 79,000 net formal jobs on a calendar-adjusted basis.
And what about Asia? How did those markets perform?
Mostly higher there too. China's Shanghai Composite rose 0.33%, thanks to a rebound in AI and semiconductor stocks. However, Hong Kong's Hang Seng Index bucked the trend, dropping 0.60%. Over in Japan, the Nikkei finished 0.32% higher, recovering from an early slide, though investors remain cautious about potential Japan-US currency interventions to prop up the yen.
I saw South Korea's KOSPI had an impressive day as well.
A massive rebound there. The KOSPI jumped 1.62% to close at 6,359, recovering from a brutal 5% plunge in the previous session. Investors were highly encouraged by South Korea's inflation data, which cooled down to a 3-month low of 2.8% in July from 3.2% in June. Down under, the Australian S&P ASX 200 surged 1.40% to a record high, led by banking and lithium stocks. New Zealand's S&P NZX 50 also rose 0.93%, extending gains on that strong U.S. manufacturing data.
A truly global rally. We have a lot more to cover, including some fascinating moves in the Forex market and some wild individual stock stories like SpaceX and Chipotle. But first, let's take a quick break. Stay with us. Welcome back to Market Brief After Hours. We're here diving deep into today's market action. Let's look at the currency markets now. We've seen some interesting technical setups forming. What's happening with the euro and the US dollar?
The Euro USD extended its recovery, closing up 0.19% at 1.1530. Technically, it managed to close near its daily high and held its position above the 50-day simple moving average, which is sitting at 1.1477. However, it still faces some overhead resistance, with the 100-day moving average at 1.1568 and the 200-day at 1.1628. So while the short-term bias is constructive, the medium-term trend is still feeling the weight of those longer-term averages.
How about the British pound?
GBP USD is looking quite constructive. It closed at 1.3449, up 0.12%. It is sitting comfortably above all its key moving averages, the 50-day at 1.3363, the 100-day at 1.3402, and the 200-day at 1.3399. It's consolidating just below a major psychological resistance level at 1.3500. If it holds above its daily low of 1.3419, buyers remain firmly in control.
And the Japanese yen? We heard about potential intervention earlier.
Yes, the USD JPY rebounded, closing up 0.43% at 157.81. This is a recovery attempt after some aggressive selling recently. It's currently testing the underside of its 200-day moving average at 157.95. It's got a long way to go to reach the 100-day average at 159.99 or the 50-day at 161.24. This bounce looks a bit vulnerable to renewed selling, unless it can firmly close above that 200-day line.
Let's also touch on the Australian dollar before moving to metals.
The AUD-USD had a strong day, surging 0.67% to close at 0.7046. It cleared its 50-day moving average at 0.7002 and finished just under its descending 100-day average at 0.7050. If it breaks above 0.7050, we could see an extended rally.
What about precious metals? Gold and silver have been on a bit of a roller coaster.
Gold posted a modest gain of 0.60%, closing at $4,078. But the broader picture remains heavily bearish. It's trading way below its key moving averages. The 50-day is at $4,179, the 100-day is at $4,428, and the 200-day is up at $4,481. It's consolidating just above a major support zone at $4,000, but momentum is weak. Silver, on the other hand, had a much stronger bounce, closing up 2.43% at $59.57. It's still deeply submerged below its 50-day average of $63.38 and 200-day of $70.22, but buyers successfully defended the $58 level today.
Fascinating technical setups. Now, let's talk about individual companies. There were some incredibly dramatic moves today, starting with SpaceX's first ever earnings report post-IPO.
This was highly anticipated. SpaceX reported a massive 92% jump in revenue for the second quarter. The stock actually rose about 10% during regular trading hours, but in extended trading, after they published the full results, the stock dropped 7% because their capital expenditures and AI-related costs soared. It shows how much the market is scrutinizing the massive costs associated with building out this technology.
And we saw a very similar story with AMD, right?
Exactly. AMD's revenue climbed 50%, and their data center unit sales more than doubled, up 107% year over year to $6.7 billion. Despite these incredible numbers, the stock fell more than 8% after hours, completely wiping out the 7% gain it had made during the day. Again, it's that classic sell the news reaction as investors digest the heavy investment costs.
But Palantir had a completely different post-earnings reaction.
Oh, Palantir was the absolute star of the day. Their stock ripped 29% higher. They posted blowout second quarter results, driven by an incredible 150% surge in U.S. commercial revenue. CEO Alex Karp described the demand for their AI sovereignty solutions as otherworldly.
Wow, otherworldly. That is quite the descriptor. Any other major gainers?
Zebra Technologies had a fantastic day, closing up over 26%. They reported an adjusted EPS of $6.35, which blew past the consensus estimate of $4.37, and they raised their full-year guidance.
And on the flip side, who had a rough day?
Bruker Corp fell more than 21% after reporting second quarter revenue of $838.5 million, missing the consensus estimate of $853.6 million. And Chipotle closed down over 9%.
Chipotle? What happened there?
They had to remove jalapenos from several stores in Minnesota after learning the peppers might be linked to a salmonella outbreak that has sickened 110 people in the state. So a tough day for them on the food safety front.
That is a tough break for Chipotle, and definitely a reminder of how quickly non-financial factors can hit a stock. Well, from geopolitical talks to massive tech earnings and interest rate shifts, it has been an incredibly action-packed day across the global markets.
It really has. These are the kinds of days that remind us how interconnected everything is, from a speech about the Strait of Hormuz to the price of microchips and even the supply chain of jalapenos.
Absolutely. Thank you for tuning in. If you find this useful, please follow Market Brief After Hours. We'll be back tomorrow with more insights and analysis.